Good evening, everyone. So, there are many youngsters who have graduated now and would be starting their professional careers pretty soon. So, congratulations to all of them. For the first time, the offer letter or the salary could be confusing. To help you guys on that, I have tried and put together the most common questions that I came across during my career as a finance professional. So, without any further ado, let's begin. This is a basic structure of how a salary slip will look like. The salary slip will have all your personal details, employee ID, your name, PAN, UN, etc. And then there would be a section where your earnings would be there and your corresponding deductions, if any. We will break down the components in our next slide. So, to start with, let's talk about the broader categories that will come under salary. Basic salary, we all know, is the largest part of the salary, and it's the fixed salary, which is approximately, per the industry standards, 40% of the entire salary. HRA, or the house rent allowance, as the name itself suggests, is related to rented accommodations, and it constitutes 50% of what is your basic salary. The next component would be allowances. This would vary from one company to another. It depends what a company is giving out in form of allowances. The second section in your salary slip would be for deductions. Income tax, of course, a tax on salary income, and it would be deducted as per the income tax slab in whichever slab you fall. Professional tax. This is not applicable uniformly across India. It would be applicable in some states, it would not be applicable in some. One state where professional tax is applicable is Maharashtra, and it's not a very big amount, it's generally a nominal amount. Next comes the EPF deduction. This deduction is basically the employee's share of PF, and on the top of the employee's share, the employer contributes an equal amount. It is very important to remember here that the CTC would show employer share in the PF contribution, which is not a cash component. It is added only to signify that the company will contribute an equal amount as is deducted from the employee's salary. This amount should never be taken into consideration while calculating your in hand salary. Another portion of your salary slip would be reimbursement, which could be mobile, fuel, etc. This is generally based on submission of the bills. Okay, so let's move forward. There are few points to note when you receive your first salary slip. First thing is you should check all your details: name, date of birth, PAN, date of joining, UAN number, etc., and ensure all of them are absolutely correct. And in case they are not, please reach out to the correct person to get the same rectified. The next thing that you should do is always activate your employee portal on the PF site and finish your KYC or know your customer, which is basically giving your bank details, Aadhaar card details, PAN details in the PF site, and always keep this ID active and the registered phone number updated. The next few things that we can talk about. Okay, now everyone is aware what PAN is. It's basically related to tax deduction. It's called as the permanent account number. But let's talk about UAN. UAN is universal account number. It is allotted by the EPFO, or the Employee Provident Fund Office, to every employee for who is eligible for PF deduction. This UAN number, as the name itself suggests, is universal, which means it will remain same throughout your career. Your UAN would be generated first time in the company where you join for the first time, and after that you carry this number to all other subsequent employments wherever you go. You will simply have to share your UAN number in the new company when you join. Then after that comes the tax saving part. You will always be asked to give some investment declarations. Investment declaration basically means you are declaring the amount that you will be saving under the schemes which are exempt, which are the allowed exemptions rather under the Income Tax Act. Some sections being 80C, 80D, 80E, etc. So the impact is, let's say, for example, if your salary is 100 rupees, and you are giving a income investment declaration of 10 rupees. So when your taxable salary, the amount on which tax is applicable will be calculated, this 10 rupee would be deducted, and hence you have an exemption of tax on the amount that you have invested. I hope this information was helpful. And until next time, keep learning, and please do like and this video and subscribe the channel. Thank you so much. Bye bye.